The newsroom lights cut through evening shadows as the anchor's voice booms over the stock's ticker glow. We interrupt your day-to-day financial coverage with a breaking development that could reshape currency markets overnight. Sudani's big move on the Iraqi dinar. We examine what's real, what's rumor, and what investors need to know now. We open on the atmospheric charge of crisis room intensity. A stern voice delivers. This evening, we peel back the veil on one of the most talked-about currency stories in recent memory. Sudani's big move refers to rumors circulating in tightly knit finance communities, whisper networks, and highly visited social media feeds. The suggestion, a so-called switch or executive decision by senior Iraqi officials, spearheaded, it is claimed, by a figure named Sudani, might trigger an immediate revaluation of the Iraqi dinar, aka an RV day. Today, we examine what's been verified, what remains speculation, and the potential consequences for global investment sentiment. Your heart races. You're hearing the phrase RV day everywhere in online trading groups. Reports vary wildly. Some claim the dinar will skyrocket overnight, enough to transform small savers into millionaires. Others warn this is hype, a dangerous mirage. Our mandate: to separate fact from fantasy in real time. There is no room for hyperbole. We proceed with disciplined urgency, citing only what can be confirmed. At the core of this story is a high-level source within the Iraqi Ministry of Finance. Our correspondent has spoken on background with an official who confirms that a meeting took place this week. The meeting included Minister of Finance, Governor of the Central Bank, and a senior advisor named Sudani. Their agenda, according to the source, included comprehensive discussion of a potential adjustment to the official exchange rate of the dinar. That alone is notable, not confirmation of a revaluation, but confirmation that evaluation is underway. That's new. That's provable. That matters. The markets, for their part, have taken notice. We've seen increased volumetric activity in unofficial dinar exchange platforms across forums, peer-to-peer marketplaces, and certain online communities. Buyers and sellers are driving spreads wider, anticipating big moves. We're working to corroborate data, but preliminary evidence suggests daily exchange volumes have risen 20 to 30%, with bid-ask spreads ballooning to unprecedented levels. That's the first red flag. Markets move on rumors, and volatility breeds risk. At the same time, our own outreach to economists specializing in Iraqi macro policy reveals cautious skepticism. One analyst highlights the political and logistical hurdles. Currency revaluation is not undertaken lightly. It requires legislative approval, coordination with international partners, recalibration of government accounting systems, and recalculation of debt burdens. Emergency clinics, schools, and security forces rely on stable dinar valuations. Such a move would demand a comprehensive plan, and historically, these plans are developed over months, not overnight. A second, independent advisor emphasizes a geopolitical dimension. Iraq is balancing regional power, oil pricing, and debt obligations. A sudden RV might invite backlash, instability, or speculation in other emerging market currencies. Iraq's central bank has been conditioning investors with repeated messaging: maintain stability, avoid panic. There is no indication, none, that they are preparing for the fireworks implied by widespread RV rumors. Yet behind the rumors lies a kernel of truth: insider chatter. If indeed Sudani called for higher-level evaluation of dinar policy, that is meaningful. That is a potential inflection point. But crucially, the distinction remains. Evaluating policy is not implementing policy. We repeat, there is no confirmed effective date for a revaluation, no gazette in writing, no parliamentary bill, and no transaction basis shift in banks or official venues. So far, none of that exists. Meanwhile, social media commentators, some claiming to be insiders, have posted purported leaks of an RV announcement tomorrow. Many of these posts are from unverified accounts, with messages purposely vague to sustain adrenaline. Some offer enrollment in RV-ready groups for payment, claiming exclusive access. We advise extreme caution. These posts are unvetted, monetized rumor. They threaten not only capital but credibility. Investors must heed the red flags. History is strewn with episodes where rumors sparked speculative mania, only to collapse under factual absence. Sudani's involvement may be real, plausible, even consequential, but an executive review is not a decision. Without transparency and documentation, such claims remain speculative and subject to change. Now, what are the possible outcomes? First, if the evaluation yields merit, let's say Sudani and his counterparts conclude that the dinar is undervalued and recommend a modest revaluation, the government could push for a 10 to 15% adjustment. That could be implemented over several days or weeks, with formal announcements and new exchange infrastructure. Markets would likely bounce, but with stability and oversight. Alternatively, the proposal could stall. Bureaucratic inertia, international pressure, or internal budgeting concerns might delay or shelve any revaluation altogether. In that case, rumor-driven activity would reverse, spreads would collapse, traders who bought at premiums would see losses, and credibility would erode further. Third, the government may issue a statement explicitly denying planned revaluation or emphasizing stability. That could calm speculative fervor, but also damage investor confidence in transparency. Importantly, official banking channels remain unchanged. Those with accounts in Iraqi-regulated banks continue to trade dinar at the official rate, no fluctuations, no RV effect yet. Similarly, foreign governments and major international institutions have not issued updates or risk warnings. That inaction is telling. If a currency revaluation were imminent, central banks of trading partners or agencies like the IMF often signal or prepare. Let's pause to reflect on the human impact. Ordinary savers and diaspora communities who have held dinar savings for decades may cling to hope this is their transformation moment. We recognize the emotional pull, yet we underscore the responsibility. Manage expectations carefully, avoid unloading current property or depleting savings to buy dinar at speculative pre-RV prices, or joining paid rumor groups with unverifiable leaks. What about redemption of dinar? If an RV occurs, will the new dinar convert at parity globally? Possibly not. There could be tiered conversion rules, limits, or time windows that could favor institutional holders or insiders, raising fairness concerns and legal challenges. Many questions remain unanswered, and those uncertainties remain grounded in fact. We've reached out to market regulatory bodies in neighboring countries that hold dinar positions, like Iran and Turkey. No formal notifications have surfaced. The absence of coordination outside Iraq underscores that if an RV were planned, it is not yet launched. This lack of foreign engagement is another indicator of rumor incubation, not execution. There is, however, a second dimension to Sudani's move. Some industry whispers hint at debt restructuring, not just currency. If Iraq seeks to restructure or reduce foreign currency-denominated debt, a dinar shift might lend budgetary room.